Hello, I'm Laurie Berke. I'm a principal at TABB Group. I have with me here today Steve Phillips, who's a Senior Managing Director of NASDAQ OMX, in charge of business operations in Latin America and the Caribbean. Thank you for joining us.
Happy to be here.
So Steve, we've been talking about some of the advancements in markets in Latin America outside of Brazil. I understand that there have been some significant advancements in exchange capabilities and access to exchanges and the ability to attract international capital into other markets besides Brazil and Latin America. So how did this all begin? Give us a quick background.
The alliance of note today is called MILA. It's the Spanish acronym for the Integrated Latin American Markets. It initially was formed between the Bolsa de Valores in Colombia and the Bolsa de Valores in Lima in Peru. And then subsequent to that early announcement, the Santiago Stock Exchange entered in to the alliance. Conceptually and operationally, they're using the OMX model, which is the Scandinavian group that NASDAQ purchased a few years ago. And the only successful cross-border trading, clearing, settlement type of operation in existence. The MILA group kicked off their trading at the end of May 2 years ago. Reasonable results of trading between the three countries. Chile is really the leading volume producer to date. But also very challenging issues as it relates to taxation between countries. And when I hear things like that, as far as, we wanted to trade a lot more than we did, but, we have challenges. It took the OMX group 8-9 years to harmonize the markets, particularly as it related to taxation, regulations, and things like that.
So harmonization, I would assume that advancements in technology and upgrades to exchange technology are affording an opportunity to harmonize. But what about local, you mentioned rules and regulations, local order types, the nuances of trading on these different exchanges. How is that being addressed?
Well, over the years, every country that has a financial exchange develops their own localizations as far as trade types and that sort of thing, based upon local interest, demand, and that. Some of those get incorporated into rules, others into regulations. So one of the key things in forming an alliance is to harmonize trade types. The trend in the U.S. has been less trade types, more simple trade types. Derivatives take care of some of the more complicated stuff, but in the cash equity market, it's pretty straightforward stuff. However, in Latin America, there are quite a few individualized country-specific trade types that leads to the need to harmonize trade types, because you want to have a broker in Santiago understanding trade types in Bogota and Lima, and then vice versa, all the way through that system. Simply because they need to know what they're doing. And also on the back end part, is your market T+1, T+3, that kind of thing, to have that harmonized. And then the whole post-trade scenario as well. I mean, once you do your deal, your trades match between a buyer and seller, you've got to pay for it and deliver it. So it sounds kind of simple, but it has to work.
And you mentioned that Mexico may be joining this alliance as well.
Mexico has announced, the Bolsa Mexicana de Valores has announced their intentions. This is also part of a much bigger country initiative that includes Mexico, Colombia, Peru, and Chile, where all three presidents have agreed to varying degrees of economic cooperation. Exchange cooperation is included in that bigger package as well.
Fundamental part of that package. Okay. So it sounds to me like the ability of these exchanges to harmonize, upgrade their technology, harmonize their transaction and order types, and deal with all of the cross-currency and post-trade transaction processing, that's happening. And that affords the opportunity for institutions and brokers outside of those countries to access them in a way that is relatively cost efficient and manageable.
Correct.
Relative to what they're accustomed to.
Correct. It's bigger on the radar screen, makes a more attractive liquidity pool, which is one of the major ideas behind the MILA Alliance. Direct market access or sponsored direct market access using FIX as the connectivity point. Technology is a key ingredient in this. The larger exchanges have either totally upgraded their trading technology or are about to finish the process. So technology is key. Harmonization of trade types, taxation harmonization, regulation harmonization, all critical issues that the Alliance is aware of and very actively working on.
And all quite necessary to attract capital from outside those countries.
Absolutely.
So Steve, thank you very much. We always talk a lot about Brazil. It's interesting to talk about this alliance and the future potential for attracting attention and attracting money into those countries. Thank you. We'll stop there. I'm Laurie Berke, principal at TABB Group. We've had today Steve Phillips, NASDAQ OMX, Latin America, Caribbean.